Welcome to Today in Payments. I'm your host, Patty Murphy, with your daily dose of payments notes. First up, research just released by the Federal Reserve Bank of New York puts an economist's spin on the correlation between credit card rewards and interchange. A report detailing the research describes the scale and scope of rewards programs and how that relates to interchange. Quote, rewards expenses are covered by banks' interchange income, the report states. The two are closely intertwined, it concludes. The research examined 330 million individual credit card accounts from the 20 largest banks, covering 90% of credit card lending in the country. It found that in 2023, rewards of the six largest card issuers totaled in cost $67.9 billion, and that most of that money got recouped through interchange. Interchange income is 1.82% of purchase volume on average, while rewards costs are 1.57%, according to the research. On average, the researchers found banks pass on 86% of interchange income as rewards to card users, excuse me. This economic data is timely, as a bipartisan group of senators and congressmen, led by Senator Dick Durbin, is said to be readying the reintroduction of the Credit Card Competition Act. That bill was introduced in the last Congress but failed to secure passage. The legislation is being touted as offering merchants a way to lower interchange costs by allowing them to choose the networks over which they route transactions. Next up, Block, the parent company Square and the industrial bank Square Financial Services, has received an okay from the FDIC to offer a consumer loan product it's calling Cash App Borrow. As the name implies, it will be made available to consumers who use the P2P payment method Cash App. Cash App Borrow is being positioned as an alternative to payday loans and overdraft fees. The company said it will be offered at a quote fraction of the cost of those two alternatives. Square Financial Services already offers business loans and interest-bearing business savings accounts. The average business loan is about $10,000, Block said in a press release. Those loans are repaid through percentages of daily sales, basically making them merchant cash advances. Now Block is adding consumer loans to the mix. Cash App Borrow is designed as an antidote to consumers' short-term cash flow needs. Block said it already has been offering a short-term credit product to consumers through an external bank partner, and that it racked up nearly $9 billion in originations in 2024. The average loan in 2024 was for $100 and about 1 month in duration, Block said. Now on to Washington, where the U.S. Senate Banking Committee has approved legislation to regulate stablecoins. Stablecoins are a type of cryptocurrency designed to have a stable value by being pegged to a stable asset, such as the U.S. dollar. The bill would put in place a federal regulatory regime for stablecoins. The bill has been named the Guiding and Establishing National Innovation for U.S. Stablecoins, or GENIUS Act for short. It was introduced by Senator Tim Scott, a South Carolina Republican who chairs the Senate Banking Committee. The bill still needs to be approved by the full Senate. Similar legislation is also pending in the U.S. House. Among backers of the GENIUS Act are merchant groups. In a press release, the Merchants Payments Coalition and the Payment Choice Coalition said the legislation would lead to a more competitive payments landscape. And finally, MoonPay, a leading crypto payments company, has acquired Iron, an API-driven startup specializing in stablecoin infrastructure. According to reporting by CNBC, the deal is expected to bolster MoonPay's capacity to provide enterprises with fast, cost-effective, borderless stablecoin transactions. MoonPay already enables onboarding through most traditional consumer-centric payment rails, including debit cards, bank accounts, PayPal, Venmo, Apple Pay, and Google Pay. Now with Iron, MoonPay can offer businesses the ability to accept stablecoin payments as well. Thanks for tuning into Today in Payments, and please keep coming back every weekday for your daily dose of payments notes.